Hey, good afternoon. This is Trader Tim from eMiniMind doing a Monday market analysis video. We'll also touch a little bit on last week. I apologize. The trade recap video from Thursday got the audio got dropped out, and I didn't have enough time to re-record it. So apologies there. Let's start with the just looking at the SPY and take a peek at the 50% retracement that we are sitting in. SPX works just the same, just doesn't have volume. So we can see from low to high, we have a nice 50% right around that 3,800 level acting as support. If we take a peek at the SPY, we can see pretty sizable volume from the two selling days, Friday and Thursday. And on this move up, we did see decreasing volume, and then on the move kind of sideways to down, we saw increasing volume. So that does make it a little bit more uh, bearish as far as momentum to the downside for potential downside move. Last week I did have a daily short at the 50% on the Qs that I ran from, what was that, Wednesday? And then Thursday was the pretty nice sell-off day. So that was a nice daily Q short. But otherwise, on the SPY, yes, the volume is looking weak, but the structural nature of the channel and the uptrend is intact. This is our major swing low where we poked below the bottom of the channel. And then you can see here our next current swing low is really from Friday if we can come up and make a new high. So with some potential stimulus passing this week, there could be some catalyst news. We also have what do we have this week? Just kind of the usual economic reports. Not a lot tomorrow on Tuesday. We will be doing a live trading session, so you can tune in and follow along and ask questions live. If you want to do that, it's eminimind.com/VIP is the link for that. So, pretty standard economic week as far as news announcements go. I also wanted to touch on, let's see, just running down some notes from my Thursday video, NASDAQ shorts. If I just clear off this morning's retracements, we were a little bit sloppy right off the open as far as we traded at the 50%, but we did go into the 61.8. You see how we dipped down below the 61.8 here and then resume trend. The thing to note about a day like today where we gap up and our breadth at the open was about 20 to 1. When we have such strong breadth in the advanced decline line, you really want to pass on all shorts. So unless there's some major turnaround in the breadth and advanced decline line, but I mean even where we're currently at 6.7 to 1 and 2150 on the advanced decline line, I mean that is not a market that you want to short. It doesn't mean that we can't go down within the market. Even if we draw the full halfway back for the day, I mean, it would not be I guess I'd say it'd be a little bit of a surprise if we make it to the full halfway back. But even if we make it to like, um, a 30% pullback, like there are pullbacks within the context of an extremely bullish breadth and advanced decline line, but they're very difficult to get into and ride. They're not really worth taking because there's not any follow through. So you might get in the position and you might get the trade to go a point or two in your favor, but then we just reverse and go back up. So today there was a little long here from low to high like this, but it was pretty sloppy at the time. We had a very clean bounce at first, and then we came down and broke through the 61.8. So really the thing we had going for us today is a very strong breadth and advanced decline line and the gap up. So, but at the time, it was not necessarily showing gap and go. Like if we just look at the first couple of bars on the It's going to be hard to do this since we have the gap here. But, the first few bars we had green bar, green bar, and then kind of opposing tails. So it wasn't necessarily, 4 bullish candles. The other thing that you do notice, though, is that each of these candles do make a new high. So sometimes there's little nuances within the candles themselves, or one thing you'll see a lot is we'll be within a trading range, but there is some sort of trend starting to develop within the range, and then that trend takes us out of the range. So we might have a triangle developing, which is a very range-bound situation. And then at the apex of that triangle, we break out, and that's what breaks us out of the top of the range. So today, even though like here's the top of the first 30-minute range, here would be the bottom of the first 30-minute range, and that's all well and good that we have those 2 lines marked, but what's more important is what were we doing within that first 30 minutes? Well, we are making higher highs and higher lows. We are trending to the upside, and we have very strong breadth and advanced decline line. So early on in the day, when you don't have a lot of data points and information to glean from, you can kind of come to the structural nature of the candles and determine, are each of the candles making new highs? Are the pullbacks, breaking lows of the day, or is it just a pullback to a 50%? And that's why I say it was a little bit cloudy today, because at the time when we pulled back to this 50%, we actually did come down and pierce through the 61.8. The next retracement, if we draw that guy up, traded nicely. And so if you wanted to just wait out the first one, you could take the second one. And then if we go even further, the third one traded, but once again pierced through the 61.8. And so really the best opportunity today was either the very small micro long around that first retracement, or simply buying a breakout of this high here at the roughly the 30-minute mark, just doing a buy stop above highs. And like I've said, time and time again, these larger days like this where we have, we're up 80 points on the S&P, those don't end up being my big trading days, like intraday. I don't have a ton of trades on those days usually. Occasionally, especially on the sell-off days, I'll tend to have an easier time catching a move down. But on these big like gap up and then rally days, where I'm benefiting is from the longer term positions or the swing trading positions where buying up at the 50% in a longer term account, or buying up on the trend line support, that's where, okay, all of those shares and that position is now up a boatload, and I don't feel the need to have to make a trade today. So if something sets up great, I'll take it. But if I have an order out there and I don't get filled, or if I just don't see a setup for that period of time, I don't feel the need to kind of rush things or chase things or drag my order in just to get into a position. So things are looking pretty good right now for us to come back up to prior highs and then push through. But if you notice, the first short on the S&P broke at 61.8 and then we rolled over. So even though if we draw that same high to low, yes, we've broken the 61.8, but the pattern from just a few days ago was to roll over after we broke the 61.8. So kind of the next resistance point, if we look at the daily ES, is really that high from back on the 24th, because that's our unfilled gap. We've got an open from Thursday, but there's really not a lot of resistance up here. We've got 2, 4, 6, 8, maybe 9 days of trading where we were kind of hovering around this 3,900 level. And, you know, the big round numbers can act as just almost a mental support and resistance level. But we'll see if we can push through highs very easily, and if we have another situation like we did back here on the at the end of January, where it was gap up and then go, 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 go from there, gap and go every single day. We're kind of at the start of that with our first day of gapping up and going. We still have a couple hours left before the close here, but if we sell off into the close and make a very big inverted hammer bearish candle, I would consider putting on a put hedge at the close, especially if we close near the 50%, because that's that same, peak above and fail, if you will, or poke through the 60-18 like we had back here. And that's exactly what I did in the Qs. We had kind of come up to the 50%, and that's where I put on the position. So not a bad option to put on a hedge there if we do completely turn around and sell off into the close. But as of right now, things are looking just fine for a continuation to the top, back up to the top of the channel, and maybe we'll get a poke into new highs and then more of a straight up push as opposed to kind of riding the top of the channel at a 45. So that's all I got for you today. If you have questions, drop them in the comments below. Hope you have a great week, and we'll talk soon.